Good morning, everybody. Hey, welcome to Wednesday, October 27th, as we get ready to look to see what could be happening in the marketplaces. We're seeing a lot of earnings beats. We're seeing some misses in there too. So it's hard to tell exactly which way we're going, but I do know this: we're seeing a lot of volatility in the marketplace, starting high, ending low, those type of things. That makes it even more important to make sure that you know how much risk you have in your current portfolio. Give us a call at 863-382-0037 to dive into our core retirement design to create the retirement you always dreamed of. And with that, we've got Dave coming up next.
105.7 Right FM. Wind and fire there. It's 8:40. Kind of get all three when you look at your finances, Tim. Let's find out what the Sam Hill's going on Wall Street this morning. Is we're in the middle of earnings season, and unpredictable times are upon us. Let's find out if Phillip Statler from Statler Financial Services can make any sense out of this. He's on the line this morning. Good morning, sir. How are you?
Good morning, man. I hope your day is going well, halfway through the week. And hey, October's about over.
Oh, yes, it is. There isn't a witching hour for Halloween weekend, is there?
I don't think so. I don't think so.
Okay, last Friday of the month very often is, so I figured that'd be about the last thing in the world we need leading into Halloween. Setting the table yesterday, it was green ink at the end of the day, kind of a herky-jerky day. I was asking you when we first got on the phone before going on the air what happened about 10:30, because everything kind of took a nosedive, and nothing special. We actually had some good economic reports yesterday, but we did end up the day up, which means a couple of new records. Dow was up by 15.73. The S&P was up by 8 1/3, and the Nasdaq was up by just about an even $9. So that's the kind of day you really want to see, just very modest little gains day by day. It's just as you look at what happened during the day, things looked kind of strange, didn't they?
Yeah, they did. It kind of bounced around, and it even the futures this morning, Dave, as I was watching them. When I first got out, they were up pretty high, and then I looked at them again, and then they became mixed. So I'm not sure how we're going to open the day yet.
Yeah, we're kind of swinging back and forth. I mean, it's not a wide range in the Dow, but they're swinging back and forth around a 100-point range. And because we're talking about modest changes, that means we're going from red to green and back again. We did mention there was going to be a couple of reports out yesterday, and we had positive response out of the government data dump yesterday midday, I gather, huh?
Yeah, we did. We did. We had, the couple things we did have come out about 10 o'clock yesterday. We had the consumer confidence index came out and new home sales came out. So consumer confidence for the month of October was better than expected. They expected that number to be like a 108. It came in at 113 on the index. And then new home sales for the month of September were expected to come in about 760,000. They came in at 800,000. Almost 100,000 better than the previous month. So some good news there. But again, like you said, somewhere around that 10, 11 o'clock number time frame, the market started to kind of give up some of their gains.
Yeah, I got to start wondering whether we're looking at basically some computer-driven profit-taking being taken. Since we are, frittering around at nosebleed level and setting new records, somebody's computer has to have some macro that's saying, okay, hits this point, sell, and you kind of wonder down the line. We start out this morning with the same kind of good news out of the economic front. The government dump on durable goods orders comes out this morning. We were expecting, again, looking at the notion of shipping concerns and whatnot, a decline, but they were expecting better than 1% down. We ended up only down 0.4% in September. And once you pull out the transportation, they were expecting a 0.4% increase, and we ended up with an 0.8% increase. So the things are coming up relatively rosy on the macro front every morning we get to these numbers, don't we?
They are. Those numbers are looking good. I've got to think, though, that one of the things that's going to continue, I think, to put pressure on the marketplace is going to be inflation, Dave. And I read a little article today that said basically, guess what? This year's Thanksgiving dinner will be the most expensive dinner you've had in history for Thanksgiving.
Yeah, I was having a little bit of fun with that earlier this morning. Yeah, the most expensive Thanksgiving dinner ever. At the very least, you'll have something to complain about other than politics with your in-laws, right?
Yeah, I mean, they say it's going to be up 4 to 5% from what it was last year.
Absolutely. And I'm hearing stories that turkeys in the middle size ranges just are doggone hard to find these days.
Yeah, I also saw that supply chain issues are going to be a problem again for that type of thing. So
Yeah,
it is what it is. We continue to battle through it.
absolutely. I got one interesting report since we're right in the middle of earnings season with a whole pile of big high profile names. Of the 140 Standard and Poor's 500 companies that have reported earnings so far in earnings season, 82% have beaten Wall Street estimates. It sounds like we're always throwing Mary Sunshine every morning when we do these reports, but yeah, 8 out of 10 of the reporting companies have actually beat estimates. But they're outside of every silver cloud. There's a silver lining. There's always a big gray cloud. Some green eye-shaded Deutsche Bank decided to go through the financial sector reports, and we were saying they were doing so doggone well. They pulled out all the bad debt pullbacks we were talking about and pulled that out and redid all of their reports. The financial sector, if it weren't for taking back bad debt write-offs, only about 5.2% of the financials would have beat the street. Outside of every silver and outside of every silver lining, there's a big gray cloud somewhere, isn't there?
Yeah, and that really makes sense because we've been seeing the financials, with some great numbers, and the great numbers are always attributed to a reduction in the allowance for bad debt, which lets them pick that up for the quarter as income. So they said that's actually a good. It'd be nice to see that report more often, wouldn't it?
Yeah, absolutely. I mean, every time we do that and we say, well, the only reason they did well is because of bad debt returns, I mean, hey, that's good news for the economy. It means people are paying their bills and we're getting through this just fine. So, while it doesn't help their report any to pull that stuff out, frankly, being able to say, everybody's paying their bills just fine, I consider that good news, even if it warps a bank report.
That is good news, Dave, but it's always nice to see what the true operating income is for the quarter, or what the loss is for the quarter, based on the real numbers and not these allowances back and forth.
Yeah, which basically means the banking industry was incrementally better this quarter, but not as big as they all claim to be.
Exactly. There you go. That's the way to say it.
Speaking of better than they claim to be, we had a couple of high-profile beats right after the market closed last night, didn't we?
We did. Which one? Which one you want to start with first, Dave?
How about the place that nobody ever recognizes the name of the company, Alphabet?
All right, so we look at Alphabet. That's the Google, right? That's Google. For those that don't realize what company it is, they had a really good quarter. For the third quarter, they beat by over $4 a share. They came in like $27.99 a share. High price stock. Their revenue top forecast as well. They saw the biggest growth for Google ad sales in 14 years. So everything looks Merry Sunshine, right, Dave?
Mm-hmm.
Well,
What's their stock doing?
It's down 0.4%. I just don't know what the fly is in that report.
I gotta believe some of this is just a little bit of testiness about tech stocks driven by advertising, given all the scandal Facebook's going through.
It could be, and it could be some profit taking. Maybe some people just bought at the right time and decided it's time to take some money off the table out of Google. But the other one we had that reported yesterday after the market closed was Microsoft. Microsoft, the beat by 20 cents a share at $2.27. Revenue well above forecast. They're benefiting by significant growth in their cloud computing business, and so they are doing well this morning, up 1.8%, and they closed yesterday up about a little over 0.6%. So they're getting close. Well, actually, they will open. If they open right now, that'd be a new 52-week high.
Understood. Cool. One of the things that came out at the close last night that you and I were kind of giggling about is a level of poetic justice. Robinhood, the brokerage firm that the online Reddit guys have been using to drive stock prices up and down at their will, seems that they aren't doing as well as they thought they were going to, are they?
No, they didn't. Robinhood, they they missed way bigger than expected, larger than expected loss, and quarterly revenue also missed estimates. So they were hurt by declining trade levels for cryptocurrency, among other things that they kind of put them in the issue there. They're trading down almost 8.4% this morning.
Looks like the sheriff of Nottingham won a round with Robin Hood, huh?
I guess so.
I don't mind a troublemaker once in a while having a disappointment. I don't wish ill on the company, but I kind of like justice too, don't you?
Every now and then, that's right. It is nice to see. Hey,
Absolutely.
We had a couple other household names reporting. The first one was Coca-Cola. They beat on both revenue and profit, and they raised their full year guidance. So that's a trifecta there for them. Trading up today almost 3% before we get going. And then the other one's been in the news a little bit lately, and that's McDonald's. They beat by 30 cents a share, came in like $2.76. Revenue beat, same store sales exceeded the forecast. They're obviously, because of all their costs, they've raised prices and been able to do that. And they're playing with their menu again, adding some items there. So they're up a little over 2.75% this morning, almost at a 52-week high. They're at $243 a share.
Wow, that's up toward the top of my big winner list this morning.
It is.
I know you mentioned.
Go ahead.
Yeah, you have a couple more, and I know one of them is General Motors.
It is General Motors. Funny, they beat on top and bottom line both. Had a really good quarter. They issued strong guidance for the year, so everything looks good. It looks like another trifecta for them until you look at the stock price. I don't know what people are seeing or what they're not seeing, but they're trading down this morning, 3.1% right now at $55.58 a share.
Sometimes things don't have to make sense day to day. We always talk about data points, and sometimes you get a practicum on the daily stock prices too, right?
Yeah, I mean, General Motors, all ups and ups and ups, but their stock price is heading down. Well, Boeing is kind of the opposite. They lost 60 cents a share, which was 40 cents more than expected. They're only expected to lose 20 cents a share. Revenue missed on forecast as well. Now, they did report better than expected free cash flow, but they're trading up this morning, Dave, 1.2%. Go figure.
Like I've always said, the study of the stock market sometimes is an ancillary subject to abnormal psychology, right?
Yeah, it's really crazy. Let's finish with Visa, because Visa kind of gives us an idea what people are spending. They beat by 8 cents a share. Revenue came in ahead of forecast. They're getting benefit of more online spending, more travel spending. Again, they're just not hitting it out of the park today. They're down 2.6% this morning.
I'm really thinking that we're talking profit. We're talking about profit taking more than anything. They're buying the stuff that's down and selling the stuff that's up.
It could be, but because there doesn't seem to be any rhyme or reason.
That really doesn't. Again, a modest up day yesterday on the major indexes, 45 minutes before we opened this morning, Phillip. It's weird as far as the individual stocks are concerned. How are the indexes doing 45 minutes early?
They're up slightly, and I mean slightly. The Dow is up less than 0.1%, like $29. S&P 500 is up like 90 cents right now, not even $1. And the Dow and the Nasdaq's up a little less than $10. So not really pretty on that front, but it's green. Commodity side, silver is up almost 0.5%. Gold really must have tanked yesterday. It's down below $1,800 an ounce again, up about 0.1% right now at $1,795 and $1,795 an ounce. And then crude oil is down about 1.33% to $83.52 a barrel.
Never thought I'd be happy to see it under $84 and call that a benchmark I'm happy with. Overseas markets, kind of a red ink day on the Asian rim. No particular reason beyond the usual sets of world upsets. The Hong Kong market was off by almost 2%, though. Europe also generally off fractionally halfway through their day. What goes up must go down, and sometimes what should go up actually goes down, as we were talking about it. That makes picking stocks in your IRA kind of a risky proposition. How do I get a hold of you to stabilize my retirement plans, Phillip?
Then give us a call at 863-382-0037. You know, we've got our core retirement design, a way to really design the retirement you always dreamed of. And give us a call for that. Check out our website, statlerfinancial.com. Then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, and now on 95.3 FM.
All righty, and the Saturday run's going to run a little bit early because the Gators begin at 12:30 on the network, so we're going to run your Saturday program 11:30 to 12:30 on Saturday. Fair enough?
All right, man, sounds good.
All righty, and we will see you here tomorrow morning, same time on Light, Phillip. Thank you so much.
All right, man, you have a great day.
Be well. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. I hope that your week is going well. Remember, our trademark process, the core retirement design, made so that we can design the retirement you always dreamed of. Give us a call, 863-382-0037 to schedule your time to visit. With that, have a great day. We'll talk to you again tomorrow. Bye now.